What is going on, traders? Welcome back to the Traveling Trader. In this video, we will discuss the possibilities of an upcoming stock market crash. We'll also take a look at what happens to the stock market during a contested election and what I'm doing with regards to my portfolio. I definitely want to do what I can to protect these profits, especially since buying up cheap blue chip and growth stocks back in March and April. I'll also go over which stocks to hold and buy through the wave of upcoming uncertainty, so you'll want to stick around till the end of the video. Should you buy gold? Should you buy recovery stocks? Stick around and find out what my opinion is. And I just want to say, if you get anything out of this video, leave it a big fat thumbs up like this. Leave it in the comment section below. Let me know if you think a crash is coming and why. And if you want access to all of my trades, link is in the description below. You get access to my portfolio, options trades, stock trades. You get to talk to over 800 traders and investors in the group where we exchange ideas, entries, exits, stock picks, etc. Link is in the description below. It's a great value, so sign up. All right, on the surface, there are a number of factors that seemingly could bring the market crashing down. We have the election coming up, and there's usually a lot of volatility leading up to the election, months leading up to the election. So we'll take a look at that. There's also the possibility of a contested election depending on who wins. Now, we have had a contested election before back in 2000, so we'll take a look at data from that time period. We have a little something called the pandemic as well, with rising numbers in some areas, as well as some grim expectations based on the upcoming flu season. The economic uncertainty continues, stemming from the pandemic as well as a lack in vaccine, and for all intents and purposes, stimulus talks seem to be at a complete standstill. Now, while this can seem as grim as a dystopian science fiction novel, there are actually some very encouraging signs surrounding us. Now, according to some economists, we're technically not in a recession, at least according to the textbook definition sense. Homebuilder sentiment is at a record high, and we are in fact on track to record a 30% GDP growth, which would be a new record. US retail sales are blowing expectations, auto sales are surging, and US jobless claims have fallen to almost the lowest level since the pandemic started. First, let's take a look at the history of bear and bull markets in this country. Then we'll talk about how the stock market reacts to elections and contested elections more specifically. Then we'll briefly address the stimulus and the pandemic and its potential effects on the stock market moving forward, finally rounding off with how to trade the upcoming volatility and what stocks to buy and hold. Now, the S&P 500 officially crashed to a bear market in March, falling from the February 19th highs. And we are officially now in a bull market, marking the fastest bear market and bull market in stock market history. We crawled out of that hole that we hit in March. Now, a bull market is defined as a 20% rally from recent lows, and a bear market is a 20% drop from previous highs. Now, keep this in mind. This is a very important stat. There's only been one time in history that we've established a bull market that has not lasted for multiple years. That happened back in 2001 during the dot-com bubble. As we take a look at the S&P 500 weekly chart here, you'll see that from September highs, we dropped almost 37% to November 2001. And mind you, the contested election was during this period, but that is neither here nor there. Now, from September 2001, we actually crawled out of the hole and gained almost 22% on the S&P 500, and then we fell another 32%. Now, another interesting tidbit is that bull markets actually last a lot longer than bear markets in the US stock market history. Bull markets last an average of above 1,700 days, and bear markets last an average of around 360 days. But like I said, there's only been one time in history that we've established a bull market that has not run for multiple years, and it was that time back in 2001. Now, as I said before, that this is the fastest bear market in history and the fastest bull market in history, but the number of days might not be that big of a significance because the percentage drop was also the most violent within the shortest amount of time. The S&P 500 dropped around 34% in the shortest amount of time, and the average bear market drop is 37%, so we're right around the average. Now, this historical record is actually favorable to current market conditions, and if we base our prediction on whether we hit a stock market crash or not based off of this solely, then the odds are in our favor that we don't hit a stock market crash again. Now, this is not to say that we don't see another correction. A correction is defined as a drop of 10%, but under 20%, so not quite a bear market, but a drop of more than 10%. We already saw that earlier this year, actually last month. In fact, the S&P 500 can retrace to the 200 weekly moving average and still be within correction territory. In my view, a correction is more plausible than another bear market or market crash. It is important to note also that the impetus for this bear market was not a financial one. It was one caused by an international health crisis. Again, home builder sentiment is at an all-time high. US retail sales are blowing expectations. We are on track for the highest GDP growth in history. US jobless numbers continue to fall. Plus, if we get a stimulus, if we get a vaccine, if the election results are concluded, regardless of the candidate, as we'll show, the stock market doesn't really care who the candidate is. You lump in the fact that a lot of NASDAQ heavy stocks are actually having record earnings during the pandemic. All those factors considered, I see a stock market crash to be a rather implausible scenario. Not impossible, of course, but just not likely. One other thing to consider is that with effectively 0% interest rates, there is nowhere to put your money. That's why the stock market is flooded with investor money at the moment, along with Fed interjection, of course. So far, the stock market looks like it's in a rotational recovery mode. More on that later as we discuss how to tackle our portfolios leading up to the height of uncertainty. All right, let us move on to the election. Regarding the election, we tend to see a lot of volatility in the months leading up to the election. And as I said earlier, we actually saw a stock market correction just last month back in September. And if we take a look at the S&P 500, we could see it is actually forming a double top on the daily chart. Now, this is a bearish pattern as the price action tries to retest resistance and fails, forming a double top. Investors lose a little bit of short-term confidence and the market continues to drop. Now, the volatility usually lasts just a short amount of time until the election is over. And then once the election is over, leading into the holiday season, we usually see a lot of positive, bullish short-term sentiment, and the market continues its rally again. Now, if the market is already in a bull market like we are now, then the market will further propel its gains. However, what do we do in a contested election? Well, lucky for us, we actually have had one of those not too long ago in the year 2000. This may come as news to some of you Robinhood millennial traders. Yes, there was a stock market back in 2000. Yes, you were able to trade stocks before there was Robinhood. And yes, we actually have had a contested election between George W. Bush and Al Gore. Now, between election day and the end of the month, the S&P actually fell around 8% and the NASDAQ dropped by 24%. But it's important to note that we were already in a bear market and it was the apex of the dot-com bubble. Now, in my view, a contested election will actually have very few effects and will unlikely change the overall course of the stock market, especially for the long term and especially if we are already in a bull market. Now, it could undoubtedly have short-term effects, and short-term effects could yield a lot of volatility, which is music to my ears. Now, we'll talk about that more when we get into portfolios and stocks, but if your investment horizon is the long term, then changing your strategy just for the few weeks that a contested election will take is really not something to consider in my view. Now, the last thing I'll say about elections is history shows it does not really matter who the candidate is. So everybody who's pontificating about this candidate that is going to crash the stock market or that candidate is going to be bad for corporations, no, let's be real. The system is designed so that a president comes from one of two parties, and both of these parties have been historically friendly to corporate America. There's a reason that it's set up this way. As a matter of fact, if we take a look at a graph historically going all the way back to 1926, here's how the stock market performed before, during, and after presidential elections. It does not really matter in the long term which party the presidential candidate comes from, as long as it's one of the two main parties. As a matter of fact, in recent history, the stock market has performed extraordinarily well under Democratic candidates like Clinton and Obama, but the same thing can be said for Trump, George Bush the father, and Ronald Reagan. So in the long term, it doesn't really matter, and this definitely shouldn't be used as a gauge of whether the stock market will crash or not. That's not to say we won't see short-term volatility, which again we'll talk about, but we can definitely take advantage of, and you'll want to have cash on hand to take advantage of that. Now, before we get into portfolio management and how to trade the upcoming potential volatility and what stocks to buy, let's just briefly talk about the stimulus and the pandemic. In my view, it is unlikely we get stimulus before the election because there's no incentive to do that. There's absolutely no incentive, unfortunately, for the House to agree on a stimulus package and boost the clout of the opposing party right before the election. It really sucks because while they're out here playing political football, there are millions of Americans actually suffering and depending on that money. But in my view, it is unlikely that we'll get it, and I think the the market has largely priced in that assumption. Regardless of stimulus, the market is showing an excess of optimism for recovery and an insatiable appetite for risk on assets. The market is showing insanely bullish sentiment with a record low short interest and an increase in options contracts. According to the CFTC, this is the second largest net increase in long speculative positions in data going back to 1999. So what that tells me is that the market would actually welcome stimulus, of course, but they are not depending on it, at least for the short term. And they know it's coming in one form or fashion, whether before the election, highly unlikely, or after the election, very likely. And regarding the pandemic, I don't think more Americans are anticipating lockdowns. In fact, consumer behavior has shown more and more that Americans are willing to live with it, and we are not willing to sacrifice our economy because of it. And depending on the numbers that you look at, the effective death rate is actually declining, even though the number of infections is increasing, meaning that we have potentially developed better ways to deal with it. Now, if a vaccine is truly around the corner, when it is officially distributed, expect the stock market to boom. And this is the perfect segue into the final segment of this program, how to trade the upcoming volatility and how to position your portfolio accordingly. Now, in general, when we know we have upcoming volatility, you'll want to keep cash on hand. You want to keep liquidity on hand. As I always say, volatility provides opportunities and liquidity makes dreams come true. If you ever hear somebody else say that, you know that it started here. It's literally the best 1-2 punch combo in this blood sport that we call trading. Now, you'll want to raise cash some sort of way, either by bringing in more cash or trimming some of your holdings to keep cash on the side. And what I'm particularly looking for is an overreaction due to a number of these factors that we discussed, whether it's a contested election, kicking the stimulus can down the road further, a slight delay in vaccines, etc. What we want to look for is an overreaction so that we take advantage of that opportunity. Now, I just want to say, if you're a long-term investor and your risk profile is passive, then you'll generally want to hold through these bumps. As I said earlier, you don't really want to change your investment strategy based on some volatility that might last a few weeks or a few months. Now, keep this in mind, regardless of your investment horizon, we are in a rotational recovery, in my opinion, meaning money is being rotated from one sector to the other as the news comes out and shifts the narrative. So, for instance, if we get a new wave of infections and we don't have a vaccine yet, then we'll want to keep paying attention to the work from home stocks. This includes stocks like Zoom, DocuSign, Slack. Also, your cloud-based stocks like Palo Alto Networks, Okta, CrowdStrike. There's even a work from home ETF called WFH that simplifies things for you. I'll link to it in the description, but you could see all of the holdings here. Don't forget about the fast food stocks that thrived during this pandemic period of pickup and delivery. Stocks like Chipotle, McDonald's, Domino's, Papa John's. Furthermore, retail plays both online and brick and mortar that have thrived during the pandemic. Amazon, Big Lots, Target, Walmart, Costco. And if you want access to all of my trades, again, link is in the description below where I send out all of my stocks and options trades. I send out my portfolios, etc. Now, if we do get a vaccine, watch out for a huge sector rotation, and I mean massive. Investors will likely shift from overweight work from home stocks like Zoom into some of these extremely battered stocks like airlines, cruise lines, hotels, restaurants, ride sharing, and auto companies. These stocks are still beat down, and there will be a massive opportunity when the time comes, just as there was an opportunity back in March for the blue chip work from home, stay at home stocks. So just to recap, in my view, if you have not invested in the stock market, now is really not the time to do it because of the upcoming volatility. And because of the upcoming volatility, you'll want to keep your ears to the street, and you'll want to watch out for any sort of signs of an exaggerated sell-off. And if we don't yet have a vaccine and we expect infection numbers to grow, then focus on some of those stay-at-home stocks that I just mentioned. Now, if we do get an exaggerated sell-off, also don't forget the golden rule. You want to buy the dips on the blue chips. So if you see Microsoft, Apple, Tesla, etc., if you see those battered down and they're down 20, 30, 40%, then yes, you will want to pick them up for your long-term portfolio. And here's why I'm ultra bullish on the long term. If we get a vaccine, if the election is concluded, if jobless numbers continue to drop, if a stimulus is achieved, and we get American businesses reopening more and more, then expect a major boom in the stock market and a continuation of the bullish rally. As I said in the beginning of the video, we have never had a bull market that didn't last multiple years, except for one very short time, and that was back in the dot-com bubble. The average bull market lasts 1,700 days. Now, there will be some very juicy options plays to play around this volatility, and if you want access to my option plays, link is in the description. Now, it's going to be very hard to dictate timely option plays here because options are very time sensitive. Anyway, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know if you agree. Do you think a stock market crash is coming? And if it is, how are you playing it? Let me know in the comment section below. If you want access to my portfolio, to our trades, options, stocks, etc., link is in the description. Stay safe out there, traders. Peace.